Good morning, good afternoon, and good evening, folks. If you guys can hear me loud and clear, and if you can also see my screen, please let me know. Hello, Andres. Sound, yes. Screen, yes. Love that. Hello, Mutha. Good to see you over here too. Active. It's always really pleasing to see a very familiar name. Hello, Mustafa. I hope you are well too. So, okay, let's begin. Now that you guys can hear me loud and clear, and of course you can see my screen. Welcome to our weekly series of masterclass. In today's segment, we'll be covering stocks. We'll be focusing on a number of stocks which are very much in the which are very much in the news. For example, Walmart, they came out with the earnings yesterday. Home Depot also came out with the earnings yesterday, and then Target announced their earnings today. So we will look at that particular consumer discretionary sector, consumer staples. We will also look at the tech sector and banks and finance, everything, basically all the 11 sectors of the S&P 500 index. A bit about myself: I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, currently providing services as a chief analyst for AvaTrade. And I also write as a columnist for NASDAQ and written for Forbes for over 5 years. So if you do not follow me on Twitter, I recommend you to do so, of course, because that will give you a lot of information in relation to what is happening in the market on a daily basis. Bit of a housekeeping: risk warnings and disclosures are in front of you. If you need any further help, please do get in touch with your own account managers. The contact details for our social media are as follows: Twitter, AvaTrade, and our YouTube is also AvaTrade. This is where we post our YouTube videos, as well as on my own personal channel as well. AvaTrade's unique technology is something quite important for you guys to know. With AvaProtect is a revolutionary one-click risk management tool available on the AvaTrade web trader and the AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading accounts. The only cost, of course, is going to be your AvaProtect fee itself. Now, what are we going to do today? Remember, in our last class, we talked about Chinese stocks. We talked about how that massive sell-off was really taking place in China because of major challenges, the regulatory challenges, the crackdown by the Chinese authorities on Chinese companies. And we talked about that is an opportunity to bag some bargains because, yes, things have changed to a certain extent, but this still represents a huge opportunity for investors and traders, and why they shouldn't be really afraid of that. So that is what we'll be covering in relation to that. That where is Alibaba's stock trading now in comparison to what we did previously? Also, we look at Tencent if possible. But in addition to that, we'll be looking at our traditional stocks, which we've kind of followed all the time. So the names like Amazon, eBay, and in the energy sector, we'll be looking at Chevron and Exxon, Mobil, Shell, Total. For banks, Bank of America, Citi, Barclays, Goldman Sachs. Pharmaceuticals, of course, Pfizer had a pretty big news today. Their CFO is resigning, but he is going to be staying for some period of time until they find a new CFO. And then, of course, we'll be looking at Johnson & Johnson. In airlines, Boeing is very much in the news recently because of their new jet and the problems around them, how those problems are being addressed. So we'll be talking everything in relation to that. Just out of curiosity, have you guys invested in any of these Chinese stock? or any of these Chinese stocks on the back of our previous educational trading webinar, which we did on the stock market, covering basically on the series of the stock market. I just kind of wanted to know that is really good to see that a lot of people are saying yes, they have. They have a buy position in Alibaba. They have a buy position in Tencent. That is excellent, guys, because that is the whole purpose. The purpose is to really present you guys an opportunity, and then you guys, make your own decision. But hopefully, the right decision. Oh, Amutha, you did it. Okay, that's okay. Maybe you will find something today within those segments, within those analysis that we are going to do today. So, for those of you who did take that opportunity, well done to those. You guys have actually executed on the plan of what's supposed to be happening. That is exactly the point over me being with you guys over here. I look at some of, but before we do that, just generally speaking, I wanted to cover markets before as well, just where the markets are trading generally in terms of the S&P 500 index, in terms of the tech index, and of course in terms of the Dow Jones Industrial as well. So we will begin the conversation by looking at the Dow Jones Industrial Average. One thing which pops out very clearly is that the bullish momentum is back for the Dow Jones Industrial Average, because 50 has crossed above the 100-day simple moving average, as you can see it over here. This is your 50, this is your 100, that is your 200. Prices have also moved away from the overbought area. That means that we are likely to see a little bit more momentum coming. Now, of course, if the immediate support zone, the immediate point of the price action that we need to keep an eye on is over here, 35,787. If the price breaks this one, then the next sort of a support is going to be at 35,352, and afterwards we'll be looking at over here 35,175. But the immediate support zone is at 35,811. The prices are off their highs. Given the fact that this is the Christmas period, prices tend to trade to the upside, and that is pretty much what I am expecting in terms of the market, in terms of this particular price action. So we're not much really to worry about in terms of the price action, because markets generally tend to trade higher during this part of the year. So that is something that we need to pretty much keep in mind in relation to that. Now, for the S&P 500 index, my S&P 500 index has formed a double top. As you can see, this is your first. Let me bring up my marker just to put some of those lines over here to make it a bit more clear. This is your first top over here. This is your second top over here. So the double top has formed. And that means that the price, if it fails to break above this particular top, we are likely to see a momentum movement to the downside. And if that happens, if that takes place, then the immediate support, just like the Dow Jones Industrial Average, this is going to be right over here, just at the bottom of this particular candle, which is 4,623 would be it. But overall, the price momentum looks pretty good. Prices are trading above all the three important moving averages. 50 is trading above the 100, 100 is trading above the 200, just exactly how things are, this should be. I don't want to spend too much time here because this is not about indices, this is about stocks. So we're going to find that out. Now, something else in terms of a technology sector, we are off the highs, as you can see over here, but we are again kind of trending to the upside. The price is about to challenge that. What I would really sort of like, what I would have liked if the prices would have come from their current price level to all the way to back, revisited this particular 50-day simple moving average area over here. But obviously that didn't really happen, and that means that it is this area right over here, which is quite intriguing, provided that the price is unable to break above this particular price action. Then that means the price is going to revisit this particular area over here. And that is what we are really going to be looking at. But overall, it is safe to say that the momentum in the US tech or the NASDAQ is pretty strong. Now, overall, if when we measure the indices, we see that the S&P 500, the broader market is very strong. We see that the tech sector is pretty decent as well. We see the Dow Jones Industrial Average, it has a higher chance to rally to the upside because the other two markets are trading pretty strongly as well. Now, let's change our profile and let's go back to the stock overview, see what exactly is going on. So I'm going to begin the conversation by looking at the Alibaba's price chart. Now, this was the opportunity that we sort of presented, that sort of we mentioned previously in the previous days. So basically what happened was Alibaba's price came in tremendous price pressure recently when back in September last year, and because of the COVID obviously that thing really happened over here. So so basically the market was selling in March, so that was your COVID sort of a low over here. That was the all-time high before COVID. Now, after COVID, we did see this tremendous sort of a rally into the prices, which took the prices to 302 to sort of a new all-time high. But from here, the price started to drop and it visited this low because of the regulatory pressures. Now, obviously, because the prices were oversold, we did see a little bit of a bounce, but then more regulatory pressure, more adverse news continued to come, and the prices from there onwards took the sharp turn to the downside and came into this area. Now, this area was the lowest price since 2019. So we kind of mentioned over here that 148 to 128 is a pretty good, decent support area in terms of the Alibaba's price. We mentioned it in our previous stock analysis webinars. You can see them on YouTube. They are still there for you to look at it. Now, after that, we did see a decent rally out of this particular zone. Prices went over to 180. And now, after reaching that 180 sort of a price level, what happened was that the prices started to retrace once again. Now, when the prices did retrace, let me just put this one over here, the price came into this particular area. And after that, reaching that 156 or so, this gave us a new opportunity for those investors to get into the trade. So like a Mutha or anyone else who've been sitting on the sideline. So now the opportunity really is as follows. Let me erase this one and then let me just make it a little bit more bigger for you to show. So now the opportunity really is as follows. So given the fact that the prices are off their lows, which the low was right over here, what you may want to put is you wanted to put a stop loss right below the low of this candle, because this is the higher low in comparison, this is the lower low. So we have two lows. So you wanted to put your stop loss just below this one. And of course, in terms of a target, we wanted to target this area. We wanted to target at least this area as first. And then the third area is going to be right over here. So that is the trajectory, the sort of where we want the prices to move. So right now, your risk as of today is only going to be this much, nearly about $11. What we're talking about is a pretty humongous moves over here on the upside. In relation to that, and I think that Alibaba has really bottomed out from its current level. So this is a pretty decent opportunity when it really comes to Alibaba, if that kind of makes sense to you guys. Are you guys clear on that of what we kind of discussed over here in terms of Alibaba? And then the same opportunities, of course, on a Tencent as well. You could do the same stuff on a Tencent. The chart is very, very similar. I'm just not going to kind of go through do that. But if you have any questions in relation to that, now is your time to really ask those questions, because Alibaba, for me, represents a pretty decent and a strong opportunity. All right, seems like people are saying that, yeah. Okay, so they're clear on that. All right, let's move on to the next one. Amazon obviously has also been in the news fairly recently as well. We did see pretty decent sell-off in Amazon prices. Let me just change these ones to, because this is your resistance. So we're gonna change this one to red. I don't know why this one is in green. Must be that they didn't save the settings last time or something. And this is our support zone over here. So this should be green. We should have just muted lines rather than changing the color. But now you know how to change the color of these ones. So for me, it's kind of very important that I put my all support zones in green, because then I know that this is my buy area. All the resistance are in red, so I know that that is my sell area. So in terms of Amazon, it's a very much of a consolidation move that we have been stuck in this particular area for a long period of time. Now, obviously, the price formed a double bottom in around this particular area. Let me bring out the pen once again to show you. So the price, Amazon price, made an all-time high right over here, and after that, Jeff Bezos started to sell some of his stock. We started to see not so much strong guidance from Amazon. So that was really kind of an opportunity when the prices started to shift from 3,772 to all the way to 3,172. 171, and then after that we did see a move to the upside. We get right into the earnings season. The prices kind of came down once again to retest the same support area which was formed over here. So we formed a double bottom, the first being here, the second one being over here. This was your bull bicycle, which really happened over here on the back of this one. Nice, seems like a smiley face, obviously. Then what happened from there onwards is that what we are seeing now, that the prices are moving to the upside. So this was a pretty decent opportunity. Did anyone buy Amazon over here in this particular zone? Because we kind of mentioned it, and the price did touch this support zone over here recently as well. So how many people actually got into the Amazon trade, and then on this sell-off, on these retracement, they came in and then they said that yes, they kind of went in. Right? Okay, just a couple of you over here. Well, that's good, because obviously you have been able to you have been able to grab that particular trade, the opportunity that you had you had that at the time. But now really I think the risk parameters are very strong, because what we are really looking at is that 3,717, the prices are trading at 3,513. If someone wants to get into this particular trade, now obviously they have to digest a slightly bit more higher risk, because what we're really looking at is putting the stop loss below that 100-day simple moving average. Another bullish sign hasn't emerged, but that will only come when the 50-day is going to switch its direction. It's going to move above the 100-day simple moving average. When that will happen, then we are likely to see pretty positive momentum. But right now, your prices are trading right over here. This over here represents your risk, and then your reward is right over here. So it's really not really that much of a great risk to reward ratio. So perhaps if you are not into this particular trade, then you may want to sort of wait for that and then let the prices come into here, and then either you can short it with the possibility of a double top forming, right? So if that happens, then obviously we have a sad face over here, and then the market then we're going to have I think I need to draw that sad face again, because I did the sad face wrong. So one over here, one over here. So there you go. So that sad face has formed, and then probably the prices would move to the upside. However, on the other side, if we do see that price breaking above this one, then you could just place your stop losses below this particular price level, and then let this prices move to the upside. Okay. Does that kind of make sense to you guys over here, what we've discussed? Any questions so far in relation to that? All right. Okay. So let's move to the next one. And that is your, um, let me just bring out the pen. Now we're going to look at banks, right? So Bank of America is something that we kind of wanted to look at. Now, obviously, the momentum for Bank of America is still very, very strong. What we're seeing in terms of a Bank of America, we're seeing the price momentum kind of starting to consolidate in around this particular area. So the opportunity really is only going to be coming if the price and when the price will break out of this particular consolidation zone over here. Either we see a break to the upside or either we see a break to the downside. Now, the immediate support zone in terms of the price action is really going to be as follows. Now, we need to sort of move our support zone. So we're going to move this one slightly bit above over here. So that's going to be our support zone. We're going to change the color of our support zone lines to green rather than red right over here. Okay, and then we're going to move our second support zone to over here as well, where the 100-day simple moving average is trading. So we're just going to narrow it down a little bit like that. So that would be our second support zone in terms of the price action that we are really looking at for Bank of America. Anything above or beyond, we kind of wanted to ignore them. We don't really want to pay too much attention. So just kind of make sure that you are pretty much looking on these. Guys, any questions so far in relation to this? Yeah, that is true. So the price can certainly come over here. So the question is, can the price can break from here to the further to the downside? Yes, the price can certainly come over here towards that 200 simple moving average as well. But overall, the finance sector is pretty strong because the Federal Reserve is going to increase the interest rate, and then these banks should really do quite well going into the next year. And then that is the optimism in relation to that. Now, when it comes to Disney, obviously, in terms of the fundamental factors, Disney is also moving into the gaming space. So I wanted to be long on the Disney side. Now that opportunity is really coming on our doorstep. Now, what we're looking at is that Disney was right here over 202 or something, that we have been waiting for the prices to come into this area of support. Now the price isn't that far from that particular area, and then we wanted to look at the prices when they come into here. So I think I will be like looking at the given the price action, we will be pretty much looking to see if the price is how the price is going to consolidate or whether the price is really going to start begin to move to the outside. So what I would really do in terms of the price action really is I wouldn't really go in as of now. I'll wait for the price to go in, let the price to consolidate or decide whether it wants to move out of this one or whether it wants to move upward. But the moment the price comes in and then it does anything like that, and then it kind of moves back above, provided that we don't get a break out of this one, then I would buy it on the break of that at a 157. So the moment the price crosses above that 157, I would certainly do that. Now, this would be for those investors who really kind of don't want to miss their move. They wanted to try the luck, and they are happy enough to risk that's $5 to $7 sort of on this particular trade. And they're happy with that, so they can certainly do that. But for those investors who don't want it to continue to wait, they wanted to bank on the opportunity, they don't want it to miss it by a few dollars or so, they can buy Disney as of now, as of today, and then forget about anything else in relation to that. Just place your stop losses below this particular line right over here, and then target this area over here as your first profit zone, 182. Your second profit zone is going to be that 202. So these would be the areas that we'll be very much focused on. But overall, Disney still represents a very, very decent opportunity to look at on the long-term time frame perspective. Does that sort of make sense? Now, about Twitter, we also wanted to have a look at, let's look at Apple's chart first of all. Now, Apple's chart is making very, very interesting patterns. And then this is probably the most interesting chart out of all of them. Number one is that on the daily time frame, we have a reverse head and shoulder forming. We have a shoulder, we have a head over here, which the price came into this area of consolidation, this area of support right over here. And we have a shoulder forming sort of over here. Now, provided that the neckline for this particular one is going to be somewhere around over here, we could see potentially a move from here to here to the upside. That means from another $10 to $13 move, which is going to move the prices from 150 to 163 to 165. That is on the upside if the bulls take control of the price. Now, bears are also very much looking at the price action very closely as well. Why? Because this 50-day simple moving average is about to cross to the downside in comparison to the 100-day simple moving average. Now, if it crosses below the 100-day simple moving average, we are likely to see a sell-off, meaning the price will fail to break above this particular zone. We're going to see the prices coming into this area. Now, if I switch the time frame and if I go into smaller than time frames, such as the 4-hour time frame, which I love to see, what I wanted to see over here is I wanted to see what I'm seeing now, which is the 50 is trading above the 100 and 100 needs to stay above the 200. One. And number two, the price continues to remain above the 50-day simple moving average. Now, if it happens really, then currently it seems like there is a great opportunity to buy. If you haven't been able to buy the price over here, let me just move this one over here to the all-time high, sort of a resistance or the take profit. If you haven't bought it over here, you can buy it over here where the price is 150. Put your stop loss below that 146, $4 in terms of that, and then you can target this particular area in terms of the price. But obviously this was the best area, the best opportunity at the time when the prices were coming into this zone. All right, folks, this is where the time is pretty much coming to an end. We haven't been able to go through everything else, but we've covered the broader market. The broader market is saying to us that the markets are likely to continue to move to the upside. This is a Christmas and a holiday period. Prices usually tend to the upside. The great opportunity is obviously in Alibaba. The prices are likely to move to the upside. I have shown you guys over here that you could potentially take this trade. And then, of course, Amazon is also another potential to the upside. We've discussed that. Disney is underneath our support zone. This could be, again, a good opportunity because the prospects are pretty strong in relation to that. And that's all for now. Thank you so much. I'll see you guys next time.